Joining us right now to talk now about the impact on all of this, the founder and CEO of HighTower, Elliot Weissbluth, is with us. Elliot, it's good to see you. Thanks for joining us. Maria. Your reaction to what took place yesterday and this investment reaction to the pushback on China?
Well, look, I think you have to separate what the White House does stylistically from what they do strategically from what they're really trying to accomplish. And if you take a look at the way the markets react, everybody obviously has a negative reaction to the possibility of a trade war, but is that actually going to happen? In my experience talking to individuals, people that are not immediately touching the markets, they have a little bit more peace of mind that the markets will resolve themselves, and with a good financial advisor, whatever the impact is, they'll be protected as all the professionals deal with what's actually happening in the marketplace.
But I mean, when you just look at the growth story, I mean, one of the reasons to buy this market has been the fact that there's growth, underlying growth.
Absolutely.
Profit growth of 26% in the first quarter, potentially 4% economic growth in the coming year. So does the trade worry eat into that growth? And does it change the reason to own U.S. stocks?
I don't think so. I think there's still a very compelling case for staying the course where we are today. That's what we hear around the advisor community that we work with.
But that assumes all of these trade disputes are going to be amicably settled soon, because investment decisions, investments started to pick up in this country finally, but now companies are wondering, what are the rules of the game going to be?
Right.
They got to know soon.
But I think, thankfully, we've all become a little attenuated that what comes out of the White House in a press release or a tweet may not actually manifest itself in policy and decisions.
It already has.
But
You've had companies starting to lay off workers.
Absolutely.
We've been writing about this on the editorial page.
Agreed.
Look at Harley-Davidson.
Yeah, Harley-Davidson, locker manufacturers, all kinds of companies are getting hurt by this. What do you say to workers who are losing their jobs?
Look, I am not defending the specific decision with regard to the tariff. That's a whole different topic. What I'm talking about is the peace of mind that most investors have, that if they have a professional intermediary, a fiduciary advisor in between them and some of all of this chaos, you have a learned professional saying to an individual, don't worry, here's why, here's how we're protecting you, even if you have all of this turmoil that's happening inside the economy.
I feel like up until yesterday, investors, and this is generalization, but for the most part, investors felt that, okay, we're just going to trust the president on this. He's playing poker. He's in the middle of a negotiation. So what happened yesterday? That it was just the mixed messages, as you said, that all of a sudden got investors so nervous.
Well, the market was down last week. We should point out. So the concern about how this trade war would play out, and it's not just with China. This is related to picking fights with allies, whether it's Canada and Mexico and the whole of Europe. A Harley-Davidson finally coming out and saying, we're going to move production overseas. Let's translate that into English, because of retaliatory tariffs from Europe of 31%. That adds $2,200 a tax to every bike that we export to Europe. So we're going to move production. We're going to cut jobs in the United States, and we're going to move those jobs overseas and make the bikes where we don't get hit with a tariff. Yeah. So I think that might be the canary in the coal mine. They're coming out and publicly saying, we're going to do this. And it's not just Lion Holding, the locker maker that you're talking about, where just with the steel tariff, because they source their rolled steel from overseas, they went from making money on every locker to losing money on every locker.
And it's just like Caterpillar, right? And in the heat of the moment, a couple of weeks ago, Caterpillar said, look, this could be the peak because of the aluminum and steel tariffs. That was around the same.
But don't you think that what Steve's comment earlier about Roosevelt sort of has relevance here? If in that era you had a decision that was made about a tariff, and then a company like Harley-Davidson also made a decision about how it was going to conduct itself, all of that would have taken time before anybody really learned about it. And it would have come out through regular press. It would not have come out instantaneously. You wouldn't have shows like this talking about it. You wouldn't have a high velocity of tweets and massive amount of people reacting, overreacting, reacting, overreacting. So I think there's something about the way today these decisions are either messaged, that they're threats they're going to do it, before there's actual activity where a business changes its commercial policies. And I think that creates a tremendous amount of anxiety.
Based on what you know here today, as far as this administration's policies, would you put new money to work in the stock market today?
Absolutely.
You would?
Yes.
Why?
Well, I think that look, you can't overreact to what's happening just in the past couple of days or the past immediate cycle.
So you still see the growth strong? You still see the backdrop for stocks improving?
Yes.
Elliot, the market's gone sideways since this trade war started, or was announced, rather, started to go into effect in January. So how does the market continue to rise if you don't have, tax cuts, significant regulatory reform? All the big stuff has already happened. So how do you get that growth?
But is there a runway? Have we seen the full impact?
Yeah.
Right, exactly. I think you have to take a look at the fundamental drivers behind what we're dealing with and not overreact to what we're seeing today sort of inside of a tariff topic.
But because you think there's a longer runway for the tax and the rollback in regs.
Well, but that's the thing. We're not to go be a history thing, but back in 1929, we had a booming economy. Then we had a devastating tariff war, nothing like what we're seeing now, and just threw the whole global economy in a tailspin. So those things, the growth, what the markets fear is this great growth that we now see coming could be imperiled if this thing spins out of control. Right. That's what markets are worried about.
But it sounds like you don't agree with that. Okay, let me ask you about GE coming out of the Dow Jones Industrial Average today, planning to spin off its healthcare business, exit the investment that it made in Baker Hughes. Instead, GE says it'll focus on power and aviation. It really is an end of an era to see GE come out of the Dow, replaced by a supermarket. Walgreen Boots Alliance officially replacing General Electric in the Dow Jones Industrial Average when trading begins today, Elliot.
So I think, look, you have to look at the way that GE is going to recover from some of this. It's obviously a fantastic business. I don't think the story's been finally written on that company, obviously.
Stock is up 5.5%. Would you buy it today?
As the CEO of the company that I'm capably representing, I don't get into the specific calls on stocks.
All right, Elliot, it's good to have you on the program this morning. Thanks so much for joining us. Elliot Weissbluth there.